Welcome to Trade Pro. In this video, I am putting another YouTuber's strategy to the test to see if what they claim is legitimate. They say this strategy has a 75% win rate using a 1 to 2 risk-reward ratio. It's very simple, only using a 200 period EMA and a 50 EMA, along with some basic candlestick patterns and rules. One thing I'll say I really like about this person is that they actually reiterate it's very important to follow strict rules and not stray from the rules. Although when watching their video, they did exactly the opposite of what they said. They actually strayed from the rules on almost every single example they showed. So I'm going to actually follow their own rules with this strategy and see how it performs. Now, let's go to their channel. Someone in my comments requested this video, so shout out to that person. And the channel is Little Panda Forex. They have quite a few strategies, it would seem, and they're doing FTMO and other popular trading related things. So this is called the best scalping strategy for small Forex accounts, 75% win rate. And in the video, they do say it again that it is in fact 75% win rate, so it's not just clickbait title. And apparently it's for small Forex accounts, so that doesn't really mean anything because you shouldn't be trading a small account any differently than a large account. But anyway, we'll let that slide. I think it's it's just for people who have small accounts. Will click on this video, get those extra clicks. Anyway, let's go over the rules. So this is the thing I like about this person is they do give rigid rules to follow. Even if they don't follow them themselves, at least they show the rigid rules, which is fantastic. So price must always be above the 200 EMA if buying and below if selling. So that's familiar. We all know that already. Price must touch the 50 EMA and give us a rejection candle. Closure above invalidates the setup. So essentially, we're looking for pullbacks into the 50 EMA in order to join the trend. So that's also familiar. That's good. And they do give exact examples of things that qualify as the rejection. So it has to be a pin bar or an engulfing pattern coming out of the 50 EMA. Okay. And then 10 pip stop loss, 15-minute time frame, risk reward is 1 to 2, and that's it. So the pair in the video suggested to use is Euro JPY on the 15-minute time frame. So that's what I'm going to be doing. And I actually have up 4 examples of this following the actual rules. In his video, he would have gone in and taken trades on situations where it does go above the 50 EMA, like here, like he would have done it a lot of different entries where it breaks the rules of the strategy. So I don't know if you should be watching that channel, but at least he gives a rigid set of rules to follow, even if he can't follow them himself. So let's go in and talk about each of these setups, and then I'll do the 100 tests. So price comes below the 50 and the 200 EMA, and we wait for that touch on the 50 period EMA, then wait for a candle setup that actually meets our criteria. Here it does touch, but there's no pin bar, there's no bullish bearish engulfing, so we just gotta wait. Here there is a bearish engulfing coming out of touching the 50 period EMA, so that's an entry. 10 pip stop loss, targeting 2 times the risk, and we're good. That's a good trade. And then down here we have a pin bar, and it has a 10 pip stop loss targeting 2 times, and it just makes it here. And then we have an engulfing. So price comes up, never closes over the 50 period EMA, and then there's an engulfing right here. And boom, it's a 2 times risk, and it's good. So some good examples here. This one is an example of a failure. So nice pin bar, but it doesn't actually work out, gets stopped out, and it's just what happens. But that, if I stopped right there, that would be a 75% win rate. So he's on track for being legitimate. in this really nice trend, really beautiful trend on this one. So let's see how it performs over a series of 100 and then get to the results at the end. Let's go. All right, the results are in after the 100 backtested trades, and they are very good. So not nearly as good as claimed in the original video with a 75% win rate, but still very good nonetheless. So there's really no reason to lie about the results of this strategy because it's still very profitable. So let's go over the results here. It was done on Euro Yen, and it was on the 15-minute time frame using a 1-to-2 risk-reward ratio, and it took 4 months and 19 days to find the 100 signals. There were 48 winners, 52 losses, and the win rate 48%. Very good, using a 1-to-2 risk-reward ratio. The most wins in a row was 4, and the most losses in a row was 7. The gain on the account, 44% if you're risking 1% per trade, or 88% if you're risking 2% per trade. So, this is very profitable and definitely could get you some really nice returns at the end of the year. I would say that the thing that I didn't like about it was using a 10 pip stop loss no matter what the market conditions are. A lot of the time that led to more losses. So doing something with a variable stop using the ATR, for instance, would do a lot better because you're taking into account how volatile the current market conditions are. Sometimes each candle is moving 10 pips per candle, and sometimes it's only moving 3 per candle depending on the market condition. So having a 10 pip stop no matter what the market condition is not ideal, but obviously it wasn't optimized what he showed on the channel, and you can definitely optimize this to perform very well. It's a type of strategy that I do like because it's essentially what I like to do, which is buying pullbacks on trends. And this is another method of determining a good time to enter a pullback in a trend. Okay, so this is a good strategy, and if you trade it properly, you're going to do pretty well. Anything that you're going with the trend and having a reliable, consistent way of getting in on pullbacks over a series of trades, you're going to perform pretty well. So I like it. I just don't see a need to lie about the results, as you're not going to get a 75% win rate pretty much no matter what you do if you're using a 1-to-2 risk reward ratio. Okay, so let's pop this up on the spreadsheet and kind of compare it to everything else. It'll be pretty high up there on the list. All right, here it is on the spreadsheet, falling at spot number 6, tied with spot number 7 at 44% gain on account. And there's 3 things that I would do to improve the results of this strategy. Number 1 has to do with that stop loss placement. Since it's a 10 pip rigid stop, I would do something more variable with the ATR. And as far as the actual stop loss goes, I would actually move it to break even at 1 times risk, then continue to target that 2 times risk, as a lot of the trades that were losses got stopped out after reaching 1 times risk. So you could probably be more profitable that way. Another thing that I would look at is potentially an entry indicator to go along with the current system. So look for that pullback to the 50, look for that candlestick pattern, and look for an entry indicator to all give you the signal to go ahead, as that's just my style. So 3 things that you could do to improve this strategy. All right. But anyway, that's it for the video. Hope you guys liked it. Have a fantastic day.